We've got a great program this morning, and as I was thinking about the privilege of introducing our moderator and our guest today, I thought about my hometown. I grew up in a very small, rural North Carolina town called Marshville, North Carolina. And when I was growing up there in the late 50s and the 60s, Marshville had 1,000 people. Today, Marshville has 1,000 people. The fact that we chose asbestos as our growth industry probably had something to do with that. But one of the privileges of growing up in a small town was that I got to see the value of authenticity early. I got to see people that really walked their talk. And I think that's what's so important today in this program. Ralph Hasson walks his talk. And he's a valued colleague of mine, but I can also say he and his beautiful wife, Mary Beth, are friends of mine. And you've got Ralph's bio, and you can see he walks his talk. And one of my favorite line items on his resume is the work that he does with the Sustainable Food Center here in Austin. And then we have Walter Robb, who has been a long-time organic food entrepreneur, great leader here in our community, and of course, since 2010 has been co-CEO with John Mackey of Whole Foods. So it's a privilege to be here today, bring these wonderful people on the platform. Help me welcome them. Thank you.
There we go. We've asked Walter to help us understand this kind of in sequence, talk about 4 things today. We want to first understand the connection between personal values and Whole Foods market core values, because I think we'll see as we go through this that the connection between personal values and the core values that are in his culture are critical. And I think we'll see as Walter talks about the organization and the culture and the teams, how those come together. So we want to understand the personal connection first. And then what is it? We're going to ask Walter to define conscious capitalism for us, really understand what it is. We hope to get through those 2 things fairly quickly. And then we want to spend the bulk of our time on how does it work in practice? What does it mean when you apply conscious capitalism to the work of leadership and the board? And then finally, the future of business. This is a big idea. It has the potential to change our definition of the purpose of business and the role of the board in providing oversight. And Whole Foods Market has led with it and championed it and been extremely successful with it, as we'll see. So, Walter, if you would, help us understand the values and the purpose that drove you to start this business. And then, if you would, fast forward and help us understand the connection with Whole Foods. What led you? I think you turned them down twice, but then you decided to join them. What was the connection, if you fast forward from the beginning, that led you to join them?
Great. You know, I went to school at another institution, not UT, Stanford, but I had this class in religious ethics, and I had this wonderful teacher who gave us a final exam at the end of the class. It said, drawing on the readings of this class, who are you and what or whom do you find guidance for the conduct of your life? And that was a take-home exam. And, you know, I mean, I came face to face with the questions about what did I actually believe and what did I actually want to do in my life. And I think that's the first time I really confronted the idea of what is a value, because what I've come to understand it to be is kind of a thing you believe, kind of a stake in the ground, something you use to guide your decisions and your processes. So from that place, then I bumbled around, tried a bunch of different things, and ultimately came to the conclusion I wanted to start a little natural food store, so I borrowed $10,000 from my stepfather because my father told me, no way, Jose. And I think it was really, like many young people, and I see this now, you know, you're trying to find your way in your life, and for me, it was mostly, I just really wanted to do something that was meaningful. I wanted to make some sort of an impact. I didn't know exactly what it was. And when I stumbled onto this, did some reading of Wendell Berry and some other things, I said, you know what? And so it was a lot of idealism of youth, and it was also a lot of like, God, I got to get going here. I got to get something working. So anyways, in all that, I started the little natural food store. It was called Mountain Marketplace. I did $200 the first day. I sprayed a piece of plywood with open, flipped it on a cinder block, and that was a very distinguished beginning to my retailing career. But fast forward with Whole Foods, I sold that store, I came back, I started another store, and I was building it out, and John came calling, and I had turned him down twice to join Whole Foods. But this time around, I was a little worn out, and I was also really intrigued by what Whole Foods was doing. It seemed, it was really making some progress. At that time, Whole Foods had 8 or 9 stores. So not that big compared to the 415 we have now. But, I think it was really the sense, if I could capture for you what it felt like then, it was this incredible sense of we were on a mission to make an impact in the world with bringing healthier food. And, it was the time still when nobody, when the president made jokes about broccoli and all that stuff like that, compared to now where people sort of accept the connection between fresh, healthy food and the quality of your life. But at that time, it was not that way. So it was a chance to join. In the end, my decision as an entrepreneur was, do I keep on doing this, or do I join up with something larger? And after really thinking it through, I said, you know what, I'm gonna join up with Whole Foods. And so it was really an idea of, here's a way I can continue the things I set out to do with a little bit more scale. And it was an interesting negotiation between John and I, because we're 2 Scotsmen, right? And nobody likes to pay anybody anything. But we got it done. So that's kind of that's here, and that's a long time ago. So I sold him my store in '91, and that ended up being store number 11 or 12 for Whole Foods Market. And I've been here ever since.
Okay.
So
it sounds like, Walter, you had this entrepreneurial streak that you had to channel
Still
into
do.
a larger organization.
Still do.
But you can do that at Whole Foods because you have an entrepreneurial culture.
Right.
But you got a bigger platform with the same purpose and values.
Right.
Okay. All right.
That's it.
Well, let's.
Thanks for the photo too, Ralph.
Yeah, I love that photo. I just love that photo. So let's talk now about what conscious capitalism is. Now, last year, we'll come back to this later when Walter talks about 2014, but maybe last fall you saw an ad like this. I opened my New Yorker and did. And when I saw this ad, I thought, wow, they're laying it all on the line. They're saying, this is who we are, this is what we do, this is why you should shop with us. That's what I took from it. And when Walter and John Mackey opened the investor conference in February of this year, Walter talked about 2 themes, constancy and evolution. And with constancy, he said, mission, purpose, values, the Northern Compass for Whole Foods, and we're doubling down on who we are. And I really took that as reinforcement of that message. So that leads us, Walter, to, I think these are the core building blocks of conscious capitalism, mission, purpose, values. And if you would, we've got some of your slides there, if you'd walk us through and define conscious capitalism for us.
I certainly will. Well, the next slide is the sort of 4
I think
principles,
so,
is it?
yeah.
Okay, yeah, right. Let me just say this, that the Values Matter campaign, which is the first time in the history of the company that we launched a global branding campaign. We spent $20 million. We were on the World Series and some of these other TV shows that I never heard of, but seemed like the right place for us to be. And it really was an opportunity finally to declare to the world that this is who we are, this is what we believe, these are our values, and it felt really cathartic for all of us, I think, to be able to do that. And it was very cathartic for our team members to actually see us do it as well. And so sometimes I think really standing up in the things that you believe and declaring that's who you are is a very powerful thing, not only internally but also externally. In any case, all of the values of Whole Foods, and we'll talk about those later, sit within a kind of a larger thought about business in general and capitalism. And the idea that somehow capitalism, as Paul Pullman, my friend that runs Unilever, said, has reached its sell-by date, and it needs to evolve. It needs to evolve, like everything needs to evolve. And I think you're seeing that, and broadly speaking, whether it's Richard Branson talking about enlightened capitalism, or Bill Gates talking about creative capitalism, or Mark Benioff talking about one and one, whatever it is, there's leaders everywhere, Howard Schultz, talking about how this sort of idea that business has a broader responsibility. And we'll come back to this sort of classic debate between Milton and John and the thoughts about shareholder capitalism. But
button on the right there.
On the right. Okay,
yeah.
good. Essentially, the way that and John and Raj wrote a terrific book, which I think some of you have a copy of, which essentially lines this way of thinking out. But in this idea of thinking about business in this way and the evolution of capitalism, there's 4 basic tenets. And the first and the foremost is that business exists for something more than money. It exists for a purpose in the world. And all great businesses have started for some reason to solve a need, to serve a customer. But what is the question is, you know, every business has its own unique set of purpose and values that go with that. And so the idea is remembering that the business exists for that purpose. So doctors heal, right? The one example John uses a lot, doctors heal. Well, what do business people do? Well, they make money, you know. And so that leads to this sort of negative narrative about business and society, which is really unnecessary and inappropriate and in fact not correct. So in terms of what business could do with change. So that's the first. The second idea is this, that business serves a broader set of stakeholders. And they're not just the shareholder stakeholder, which is a great stakeholder, but also the team members, also the customers being the first stakeholder, the communities that we serve, the environment, and so forth, that there's this group of stakeholders that in running the business, you're constantly thinking about the legitimate needs and aspirations of all the stakeholders that are participating in creating the success of the business. And so the sort of thought is you're thinking about that, balancing those things as you're making decisions. And we'll talk about that more later. Third is this notion that the business can only evolve as quickly as the leadership evolves. And I am proud to say this is my particular contribution to the book, is this idea about culture, which is, in my definition, the core values in action. It's the way we do it around here. It's the thing that people experience as the spirit of the business, right? And it's a living thing that needs to be tendered and invested in and cared for, because it is that which sustains. It's the petri dish in which all of the grand experiment of the business evolves. And so those are the four basic ideas of our thought about conscious capitalism. Again, there's lots of people talking about this sort of idea out there in lots of situations, but that's the way, that's kind of the way we've been thinking about it and how we try to conduct ourselves.
Okay. In fact, Walter, you said, yeah, I think you've said that you'd like to see culture on the balance sheet.
I do. I mean, I think about all the great brands that you respect, Southwest Airlines, Nordstrom. I mean, what is they've got this tremendous culture that the financial, you know, actually the accountant people are actually looking at putting it on the balance sheet, finding to give it some sort of a value and stick it there, because in thinking about the value of an enterprise value of a company, certainly that should be recognized. It's certainly a tangible asset from my perspective, but that's still to come, I suppose.
Okay.
Yeah.
Walter, I don't know if there's more you want to cover on this.
Well, these are just the stakeholders,
okay.
and to kind of give you an idea of the way that we think about it, which is that not all stakeholders are equal, and they're not all created equal. They're, you know, clearly the customer stakeholder is the first one for us, but then this gives you some sense of how they all relate to one another, and you're looking essentially at the interdependence of the stakeholders with one another. Instead of just thinking about the stockholder stakeholder, that you're thinking about how this business existing for all of these, and you're thinking about the whole universe of stakeholders as you make decisions and grow the company.
Right. So when I think,
in fact, flat out, the shareholder stakeholder is not the most important stakeholder for Whole Foods. We don't run the business. This isn't, I think, you know, heresy in this room, but because look, we understand the need to perform as a public company, believe me, but that's not how we get up in the morning and go. We try to figure out how we can really keep going in the world, and we think that by doing it this way, we're going to perform and produce the financial results. You know why? It's because honestly, the financial folks the Wall Street, they're never happy. If you're not growing fast, grow faster. If you're not make more money. It's like, you know, you could be tearing your hair out because they don't all agree, and so it's this constant thing of, so you better put your focus on building the company long term, and then do what you have to in order to perform. So that's sort of way of thinking about it.
okay. Anything to add on that,
Well,
Walter?
just these are they, and I think you wanted to make the point about how they evolve. I mean, these are not things you change every day, but we started out with 6 or 5, and I think now we have 8. I don't know that there's another one really coming, but I think the point here is simply that, like life, as you learn and grow as a company, your values also can evolve and mature. There's nothing wrong with that. One example for you is that we used to have the environmental core value and the community core value mixed together. As we realized, particularly in our work in the city of Detroit, some of you may have read about that the community stakeholder was one in and of itself, and it needed its own sort of core value to guide our behavior. And so we serve and support our local and global communities That also, by the way, led us to, we weren't really servicing Austin appropriately. So Roberta and some others put together a group that now that combines our Southwest region and our Austin global office, where, by the way, we have close to 1,000 team members. We have a fair amount of team members in Austin, so that we can actually contribute, participate, give to the Austin community in the sort of way in which we'd like to do that. So.
Right. And the key things that I'm taking from this definition that you've just given us, the key things are balancing the interest of an integrated set of stakeholders in pursuit of a higher purpose. And that's how the definition shifts. Is that?
It's good, except balancing can be a limiting word. You could be thinking,
Okay.
well, you were sitting there juggling balls like that, and it's not exactly like that. Sometimes you gotta go this way with a stakeholder. Sometimes you gotta put these two together. So it's not this equal thing. It's just awareness as much of anything that you're holding a larger set of perspectives as you make decisions.
All right.
Yeah.
Well, let's turn to the application now, and let's start with proxy access challenges. There have been a wave over the past 6 months, and yours was one of the most publicized. And companies have done different things. Some companies have amended bylaws to allow proxy access. Some have put proxy access measures on the ballot. What does Conscious Capitalism say about where to draw the line on this, Walter?
Yeah, well, I don't know how Conscious Capitalism specifically, but I mean, this was a situation where we were first in line with respect to this issue, and we look. Let me just say, I think we're totally in support of transparency. We built our company on the idea of being transparent about the products we sell, the standards that we have. So we got no problem there. I think what we're looking at here is a question of governance and what's appropriate governance. And the way this thing came out was we had a activist shareholder that came and said, we got made this proxy access proposal that Roberta got all tangled up in, and we countered with one of our own that, frankly, looking back on it, we set too high of a standard of 9%. That's probably not very real. We amended that, but of course the press continues to talk about the 9%. So we could have done better with respect to that. But where we sit right now is, I think, and we had a very interesting, John and I called our largest shareholder, which is Bailey Gifford. They own 14 million shares of Whole Foods. Think about that. That's a lot of money. Anyways, great long-term shareholder, never asked about the quarter, wants to know what our longer-term thinking is. And it's like, in this particular proxy access thing, the question is not whether 3% ownership and 3 years duration is enough. Is that a reasonable standard for proxy access? That seems like where people are coming around to some sort of access is a reasonable thing for, even though it's not the large shareholders who use that portal, it's other folks that use that portal. What we had a problem with was the fact that there was no aggregation limit on there, and the proportional representation was inappropriate. We only have a board of 9 members. They wanted 25% or 3 seats, or 33%, I guess, whatever the seats was. The thing is, 2 issues. One is no aggregation limit. So you could have 150 people in that gaggle. And then the second thing is, how many seats should you get if you own 3% of the company? So we thought, well, what we'll do is we just did rope-a-dope, and we just took a step back and said, well, we're not going to go first on this thing and let it sort of sort out and see where the standards kind of play out. And I think so. The thing is, yes, reasonable access, reasonable transparency, but not. It could be very disruptive to the company if you just got any folks sitting in the boardroom in your most intimate decisions and discussions. And so the question is, how do you honor the principle of transparency and governance, good governance, at the same time be responsible to the other stakeholders? And I guess that's the way we thought about it.
Okay. So I'm going to skip the second one. I'm going to go down to the third because you touched on it twice, this tension between Longterm and Wall Street. Last week, Larry Fink, CEO of BlackRock,
unbelievable,
$4 trillion in assets under management, sent a letter to the CEOs of the S&P 500. And in that letter, he decried short-termist strategies aimed at activist investors, stock buybacks, dividends, and instead urged the CEOs of the S&P 500 to manage for the long term, invest in their companies, invest in their people. You've touched on it twice today. Talk about that tension between the long term and Wall Street.
Well, the tension is this, that the average equity hold in the United States is something less than 6 or 7 months, and there's no possible way to build a company with that perspective. So I think, capital is the small world in capitalism. I think capital needs to find its way to some sort of a longer term perspective. Still, legitimately on returns and those sorts of things, but find its way to a little longer, a little broader perspective, because that's where the tension is. And look, I mean, we've been a public company since 91 or 92, and I mean, in 2013, our team members, about 39% of our team members have an equity interest in the company through either an option or a share. So in that year, 2013, they realized over almost $200 million in gains through selling their equity interest or their options. So the liquidity that public markets afford you is tremendous, and not just for all of our team members. So I think we don't go back. We looked at it briefly during the downturn that we want to exit, but I think being a public company has some real benefits. But the challenges come when in that tension between the perspective you need to have to build a business and compete. You know, you may have heard on the last earnings call, John talked about if we weren't a public company, we'd probably be investing faster in some of these buckets that we need to keep evolving the company. So sometimes you have to just balance those things, and it is a challenge. Then there's some of the analyst community, they're just so micro-focused, like they're in the weeds. Yeah. And they're really, and so you're answering the questions, but you're thinking that's really not how to think about the business. So I think somewhere in there is the sort of tensions that you live with as being a public company, and you get the benefits of being the public company. But you know, as Howard Schultz just did his investor day or analyst day about 3 months ago, and if you look carefully at his script, it was pretty phenomenal. His lead question, what is the role and responsibility of a public company? And he talked about this tension between short-term and long-term, and how you and how you manage through that, and what decisions you make. And ultimately, in the end, kind of what he said is, well, we're going to take the long term. If you don't like it, you should sell your shares and go somewhere else. Not in a nice way, but I think the fact is that I was struck by Larry Fink's letter too. I mean, this is not the first time Larry Fink has spoken out, but this one was extraordinary because he was really taking on dividends and stock buybacks as being overused as tools. And I basically pushing for a little longer term perspective. This guy's running a lot of money, and it was a very extraordinary letter to read. And I think the other example I'd give you is Mark Benioff at Salesforce, who has had the 1-1-1 thing since he started, and asked the question quite interestingly. He's like, yes, we want to have a successful business. Why can't we also do some good in the world as well at the same time? So these questions are definitely on the table right now by some very leading executives.
Well, building on that, in our audience, Walter, in NACD here in Austin, we tend to have a lot of early stage and emerging growth companies. Mm-hmm. So if you think of the entrepreneur who's had some success, got some traction, he or she is facing a go public decision in a year or two, given this tension, given what you're describing, what would you say to them about that decision?
I'd say, well, everybody has to make that for themselves, but recognize that besides you get Sarbanes-Oxley, which it's a real humdinger right there. I'm not sure what the ROIC is on that one, except, but I think, make sure you're thoughtful about the decision to do it. I think you see some of the younger tech companies now being a little more deliberate about when they actually do that. Maybe do another round, maybe hang for a little bit, make sure you get some things solid. So I think it's true. I don't think any of us think we would not be public. I think we crossed that bridge, and short of being with Warren Buffett or something, I think we're a public company. We're big. We're large. 360 million shares outstanding. So, but I think if you're young and you're going up, I think making sure you have yourself, that you're not just doing it for the money, that you're doing it and you've got yourself kind of set would be my advice, and to do it when you're ready, but don't feel that you have to rush there to get there. Okay. I think there are more equity investors now who are willing to stay with you a little bit and see the value created. I was sitting with a couple of, some of you may know Mike Moritz, the CoCEO Capital founder, and I was just, he's the largest investor in Instacart with whom we partnered. I was incredibly refreshed and excited to hear his perspective. He hasn't sold a single company that he's invested in, and his perspective is really decidedly longer term, and I heard that straight up, and I was very impressed to hear from someone of such success as an investor, to hear him have that longer term perspective. So.
Okay. In the interest of time, I'm going to move to that bottom one, the CoCEO arrangement. So the business press is littered with examples of failed CoCEO arrangements, but it sure seems to work for you all. The investor conference, you and John kicked that off together in February. You wrapped it up together. It was just incredible for anybody who watched that or read the transcript how well you work together. How and why does it work at Whole Foods Market?
Well, first of all, you understand John's an iconic leader. You all know that here in Austin. And I don't put myself on the same level there, but he's one of those century-old, what's the term, 100-year-old leaders that's got a big view. And so I think we all understand and respect him. It's awesome to still have him at the company because you got the founder, right? And that's pretty amazing. So, but I think what it is that's the old funny line of marriage without sex, right? But it's kind of funny.
I'm not sure there's a board around that knows how to manage that.
Look, I mean, you put it in the perspective of the fact that we have a very egalitarian and inclusive culture. So, for example, at our executive team level, Jim's on, there was 5 of us that were together for 11 years, beginning in the year 2000, and we make decisions by consensus. We pay ourselves the same amount of money. We're all subject to the 19 times cap. We try to make decisions together. So we already have a track record of trying to do things together. So if you put the CoCEO arrangement in the context of that, then you see, I've been friends with John for almost 30 years, Jim for longer than that, because he went to high school with him in Houston. But I think you put it in the perspective that you see, I think what you get is the benefit of, you get 2 perspectives, and sometimes we grind, and then sometimes we have to disagree, and crank it through, and come out the other side with perhaps a better decision for Whole Foods. So I think it's about respect and communication. So a couple stories, there's times where, there was a time when I know I just tweaked him big time. I really tweaked him with something, and I could hear it, he was upset, so I just stopped. It was in the middle of a street in Colorado, said, John, let's talk our way through this, and kind of get back on the straight and narrow. And that's a matter of respect. We may not agree on something, but it's that sort of attention to it. And at the same time, John will call and say, I'm thinking about this, what do you think about it? And so I think it is a unique arrangement. People don't seem to understand. They don't understand. It's the question we often get, but it's I think it's a matter of this idea. We have very different experiences, in terms of. I was president and chief operating officer for 10 years, so running the trains. I have that sort of retail gene thing, and so we're just constantly. And then we have different ideas for the future of the company. He's particularly involved in the healthy eating, healthy immersions, those sorts of. I've been thinking about our efforts in the underserved communities of America. We're bringing both of those dimensions to the company, and we share that. So I think it makes for a richer. It may not work in every situation, but it works okay in ours.
Great. Okay. CEO compensation is under attack from many quarters. If you look at the ratios out there in various studies of CEO pay to team member pay, you see 350 to 1, 330 to 1, 295 to 1. It's incredible. It's such a gap. You've certainly gone a different way on this. You cap executive comp, or cash comp, if I've got it right, at 19 times the average the pay of the average Whole Foods team member.
That's right.
So talk about your philosophy on that.
Yeah, well, the compensation philosophy goes beyond just the executive pay, but the one there is this. And by the way, this is something we've been doing for over 10 years, so it's not a response to the current sort of 500X number that's out there. But essentially the thought that is we all share the same benefits. The philosophy is that we're all in this together. Shared fate is the sort of concept in our handbook that we talk about. We win together, we fall together, or we challenge together, whatever it is. And so this is simply one expression of that, where we calculate the average wage annually, and that's a hard cap against our salary and our bonus. And so it's been that way for some time. And the benefit of it is that people, so John and I are like the bottom. If you look at the Fortune 500 list of the CEO pay, we're down at the bottom. But other great leaders like Jim Sinegal from Costco is down there as well. So look, every company has to find their way. The question is, how much is an executive worth relative to the person that's working on the line? What is the right proportion of balance there? Every company may have a different answer to that. But for me to be able to walk around and say, yeah, I fly Southwest, or I get the same benefits you do, or there's a strength in that I have in being able to talk with team members and say, I'm doing the same thing you're doing. And it's true. I am. And so for us, in our culture, which is very much about sharing and about sharing together and doing things together, it fits. It's part of the bigger picture. And but it's interesting because our board members don't all come from that environment. They've had to learn that. So they wanted to, and sometimes we've had board members want to push us into a different compensation philosophy, or go get a bunch of compensation consultants, or do all these different things. And we've had to get that straightened out to say, this is the way it is here. And they think they're doing the right thing and the responsible thing from a governance perspective or from a director's perspective. But we've always tried to balance internal equity and external equity using these sorts of principles. So.
Okay. Walter, how do you see that in the boardroom? In other words, how does conscious capitalism show up in the way that directors fill their role? Does it show up in the questions they ask related to strategy and so on, and board dynamics? Would we see it reflected in how the board fulfills its role?
It's a great question, Ralph, because I've watched some board members come in, and one is that the board member comes in, yes, bringing their experience, but also their willingness to listen and try to learn the culture of Whole Foods first before suggesting what changes need to happen. I've seen board members do it way A and way B. And way B works a whole lot better. And for example, our Leonard Green Associates we sold them $425 million of convertible debt back in the downturn, and they joined our board, and we've kept them on the board even though they've sold out of their position, because they did an exemplary job of bringing their skill set in, but at the same time really tuning in and understanding the strength of Whole Foods is its culture, and let us work our way through according to the way that we wanted to do it. And I think so board members tuning in to the culture of that particular company and trying to understand that frame as they think through the decisions that need to be made as board members. Number two, we've also made an effort to bring other levels of the company into the board, so the board has an opportunity to hear. We don't have, you can't talk to this person, you can't talk to this person. We try to have more of an open book so board members have an exposure to different levels of the company so they can make their own judgments about the culture and where it's happening and where it's not happening. And third is board members taking the time to participate in some of the company functions. We have board members sometimes coming 2 days, 2.5 days of their time, which given all of your lives is a lot to participate in a company culture event, leadership event of some sort. And through that experience, they bond with the culture, with the company, and we bond with them, and people see, a lot of times people don't see the board. They don't know who are these people. They sit around in a room, they do these things. And so I think those types of things I see on our directors have made a huge difference in integrating the board into our culture and us with the board.
Okay. And as a follow-up to that, you've got a board evaluation process for the board to evaluate its performance and a CEO evaluation performance. And I'm sure you've got all the standard questions you want to ask about the board's fulfilling its role and so on, the co-CEOs. How would we see conscious capitalism or the core values reflected in the evaluation process?
Well, I think, we started out kind of timidly, and people weren't sure if they wanted to really do this, but we did in our company, we do full 360 morale surveys and reviews as a matter of course for many years, but we weren't doing it at the board level. So we started out with a process, and give the chair of our governance committee credit for pushing that out. And we did do that. We started doing these full 360s on the board where we have to fill out stuff on one another.
Yeah.
And we do send it to a law firm so the lawyers get their pound of flesh in there. But we sent it there, and they collaborate. So it was a little tentative the first year. Should I say? Yeah, I know. But then we started, now I can see now as we're into it, people are actually saying constructive things, thoughtful things. So we're doing two groups. One, we're doing reviews of each other. John and I are both on the board. So we're doing reviews of ourselves as directors with some very concrete, constructive feedback. And we are doing also a survey of the board itself and our practices and how do we need to get better. So I've seen the level of introspection improve over the last few years as we've committed to trying to be more transparent with one another. And as a result, I think, we have the best chemistry and in our board right now that we've had for some time as a result of some of those things. So I think particularly what's needed in boards today is generational diversity, particularly if you understand the importance of technology in business, and that it's so much more than just technology, that I think you've got to cultivate those younger millennial technological perspectives in any business that you're involved in. And let's face it, we're not natives. You and I were not natives. We are other wonderful things, but we are not that. And I think what I've learned, we probably have time to talk about it today, but in particularly in our journey into Detroit, where we built a store in inner city Detroit opened in 2013, and that experience, taught me again the power of inclusion and diversity and how the world is richer for that. And I've just reawoken to the fact that is the cultural expansion that's possible there now. I'd love to see that come even more so to our board as a result of that experience. But if we have good gender diversity, we need a greater generational diversity.
Yeah. Best question of the day, which comes from one of our advisory board members.
What's for
at a Whole Foods board meeting? What's for lunch?
What's for lunch?
Yeah.
Oh, it's twigs and berries.
Sounds good to me. Okay.
On a good day, no. Look, no, we are about fresh, healthy food. So I mean, we have all our stuff, but we'll have a meat entree. We'll also have a vegan entree.
Yeah. So Walter, there are all these things happening out there. You've referred to Paul Pullman. You now have a nonprofit, consciouscapitalism.org, with 13 chapters, an annual conference, a CEO summit. There was a question earlier that we didn't get to. Mark Bertolini, CEO of Aetna, in January announced a major initiative to raise the pay of the lowest paid Aetna employees, and he said at the time, he was quoted, the quote's in your slides, companies are not just money-making machines for the good of the social order. These are the kinds of investments we need to make. Last week, Gravity Payments, a privately held payments firm, CEO took a pay cut from $1 million to $70,000, announced a plan to raise minimum pay for all his employees to $70,000. So is there a tipping point? Are these ideas and is this debate over wage equity, for instance, moving us toward this shift in the definition from shareholder value to stakeholder value? And if so, how and when do we reach it?
Yeah, again, I mean, I would say that you don't want to set those two up as opposites, that shareholder and stakeholder.
Right.
I mean, our view is that you put the stakeholder orientation at the core of who you are, and the stockholder wins as well. So they're not at opposition to each other. It's just a broader view of how you discharge your fiduciary responsibilities and how you achieve them.
All right.
But I do think this is a bit of a tipping point at this time with respect to this. I think people know, whether it's a result of the downturn and what was exposed with respect to the functioning of capitalism, the economic system, or whether they look at how the dialogue that's happening around wages, which, I mean, again, from my point of view, is I'm glad those folks are doing that, but why did they get pushed or forced into doing it? Why didn't they see earlier that this is a step they should voluntarily want to take care of their folks a little bit more?
Okay.
But any progress is good. But this is where I think business itself has the responsibility to think more proactively about its future and how it's running itself, as opposed to waiting for somebody like government. The joke was made by Tom earlier. If you wait, they're going to come.
Yeah.
And they're going to come in there and they're going to set the rules. And that's not what we want. That's not workable. So why don't we see business voluntarily, in whatever way they do, take some steps forward with respect to this? And I think you're seeing major company CEOs speaking very loudly and clearly about this sort of idea. So it's out there now.
Yeah.
And I think the question is really what John's point is, that ultimately I think the customers are going to demand that they're going to, particularly millennial customers, are going to line up with companies that share their values. So if you're not showing up if you think you're just going to ride the rail and make money without some any broader participation, I think you're wrong. I think you're going to miss out 3, 5, 7 years down the road. The marketplace is going to move past you if you don't have some broader thought about how you're participating in the value creation, and in the world and society and the communities that you serve. And I think that's John's point, is that that's what's beginning to happen.
Okay. So you've got an incredibly accomplished and successful leadership team. You've got a vibrant culture. You've got this evolving set of living core values. How do you instill that in the next generation? How does any company do that?
Yeah, well, the first and foremost way is by living it, by actually making decisions that reflect that. Team members watch. They watch to see if you are going to continue to make decisions that honor these values you say are what the company's about. So you hold yourself to that standard. You hold yourself accountable to that, and continue to make good decisions that reflect that, and give them encouragement that in fact this is what the company is doing. And it's a lot easier with the first generation of leaders and founders, because that's why we're here. The question becomes now, the second generation and third generation of leaders, how do we make sure that they're running the company from the perspective of values? Both John and I are 60, right? 61 actually, so old. And the question becomes, how do you make sure that you're creating the next generation of leaders? And so we did start something called the Academy for Conscious Leadership, which is this idea of teaching what it actually means to lead from values. So if you get up, you're running a store, you're running a facility, and we're asking you to run it from values, to run it from these things we've talked about, well, what does that actually mean? How do you actually do that? And so we ran 1,000+ leaders through that academy. We're going to retool it now, but this is the idea if you recognize culture is powerful in business, you have to invest in it. You have to keep investing in that, not take it for granted or assume it's going to be there, but it's a living thing. You got to keep investing in it. So I think 1, by living it, 2, by investing in the future of leadership, and that's values based, and yeah, maybe I'll leave it there.
All right. I think in the interest of time, we have a lot of audience questions already, so let's go ahead and move to those. And folks, if you have questions, hold them up, we'll come and get them, or if you want to address Walter directly, raise your hand, we'll bring you a microphone. Either way. What advice would you have for the directors of a company where conscious capitalism is not woven into the strategic values of the company?
Yeah, it's a question that comes a lot. And by the way, our CEO, Conscious Capitalism CEO conference is this October 6th, 7th, and 8th, right outside here by the airport at the Hyatt. I got some great leaders coming. Mark Benioff's coming, actually, and Jim Sinegal's coming. And so if you have an interest in that, in fact, I think I'd like to offer, Roberta, if you're okay with this, we'll offer 1 sponsorship for somebody in this group who would like to come to the conference this fall, work it out with Ralph and have somebody represent NACD at the conference. I think you'll enjoy the experience. The leaders that are going to come to speak it's very casual, but it's very high level, 200 CEOs or plus or minus. So Ralph will give something for that, for you to pick somebody from the group to come and enjoy the conference. So,
oh my God, it's going to have to be a lottery, I can tell.
I forgot the question you asked me, though.
Well, we'll find another one.
No, that's not fair to the person that asked it.
Well, let's see what was it that I asked you? What advice for the directors of companies where conscious capital?
Start where you are and start where you are with respect to the culture that is, and start to ask the questions. I mean, the idea here is you move these points of view from having some sort of we have a sustainability effort over here. But most of these companies start with it's way out there in the outer orbit. It doesn't have C-level support or any sort of executive sponsorship. So it's just out there and it's sort of disconnected. But I think you just begin the processes of how you continue to move that towards the center. You can't show up and say there's a revolution. I think you start where you are and you work a little bit at a time.
Okay. Mm-hmm. You have a core value around creating ongoing win-win partnerships with your suppliers. Do you look for suppliers who share your values and will fit your culture? Have you faced situations where you discovered a basic difference in values? And if so, how did you handle those differences?
Yeah, well, in the most severe cases, we've stopped doing business together when people have been unethical, have cheated, have not followed the standards, even after counsel with it, or have, there was a company that changed the label and from organic to that, it didn't really talk about it. That felt very misleading on a particular product. So we have no additives or preservatives in our products. It turned out that tilapia were being raised with some sort of a growth hormone for the female fish, and that wasn't declared. We stopped selling it the next day. So in those cases, the chicken producer was the broken wings were too high. We counseled them once, counseled them twice. By the third one, he actually came around and we got the standard back up where it needed to be. So conscious capitalism suggests that there's a dialogue there first before some sort of a severe action, unless there's a total breach of trust, in which case you just have to say that breaches the trust with the customers, so you have to do what you have to do to protect that breach with the customers. But in the case of the chicken wings, it was like, no, we're not going to just toss these people out. We're going to work with them and try to help them get there. And so I think we had our Supplier Dinner of the Year award in Austin 2 nights ago, and here it was an amazing evening where folks were telling their stories and what it meant for them to do business with us. And somebody said, this has allowed a 4th generation on my farm, and it was a real tearjerker of an evening. And I think I wish you all could have been there to hear the stories of these suppliers talking about what it meant to do business with Whole Foods. So look, I mean, we try to be a relational company, not a transactional company, but we're doing a lot of transactions. So That's why we have the core value to help us remember that our value says win-win relationships, that this is a two-way street, that everybody has to try to win. It's not just about the cheapest price. And by the way, the cheapest price in food gets you the cheapest food. And I think what's happening in the last couple of years are people seeing there's a cost to that food that's produced in that way, whether it's the nutritional that's missing or the way the farm workers are treated or any other thing in the value creation, there's a cost to that. Detroit, when I went, there's buck a burger in every corner. That's the choice they had. It's not a great choice, or it's not for it to be the only choice. So, but we couldn't build our business without our suppliers. We have a lot of them, and we're continually striving to do to bring that values aspect of it forward through the standards that we set.
Okay. Question in the back?
As a leader of a public company, there's a very interesting, fairly recent event that is a little troubling, where private equity investors take negative positions, short sell, then act as kind of self-appointed regulators to find weaknesses in your company and sue them for good or ill. I mean, you got Herbalife, where the investor had no direct interest in whether Herbalife was acting in an appropriately legal way or not, other than to drive down their stock. Lumber liquidators, again, a regulated environment. Why aren't the regulators handling that? There's Kyle Bass now trying to invalidate pharma patents, in which they have no direct interest themselves other than trying to devalue the company for their short position. Every company is now a regulated company. It used to be, I said I was in a regulated industry. Now every company is a regulated company for good or ill. How does is that starting to creep into your management thinking, and that you, at any time, the kind of confluence of plaintiffs' lawyers and these kind of private equity investors are going to find a weakness and distract your management and drive down your company value?
So there's so much in your statement and your question. So let me take a couple things that come up. I mean, yes. We get Roberta gets 60, 70 things a day from these various folks that really, if you boil them down, maybe there's one of them that has really a substance, one or two that has substance. So the distraction for her and her team is there constantly. With respect to the short sellers, we've always had a pretty small short interest, except when we haven't been performing, and then the short interest has spiked up. And so there's a legitimate role for the shorts. They play in capital markets. But I'll give you an example. I think you're talking about Bill Ackman and Herbalife. I went to a class in Harvard Business School with CEOs, and he was there because he went to school there, and he laid out his playbook. And the way he sees it is that they're the heroes of capitalism, right? That they're there to clean up the things or hold companies accountable. And he tries to make the case that if you look at the companies he's been involved with down the road, they've all accreted value for shareholders subsequent to those interactions, right? And it was interesting because Sandeep from General Growth was in the room, and when Bill left, and that was one of the companies he invested in, Sandeep said, "That's not the way it is," So, but The Economist had an article on this recently about the role of activist investors as well, shorts as well as longs. And look, I think what I took out of that, I took two things from listening to Bill talk, which is one, that they're looking at, they go after inefficient allocations of capital. Okay, when in the case of Home Depot, for example, they were continuing to build new stores when their returns were less than 3%. He was right. The capital should have stopped flowing there. So I really came back and looked at our returns on capital. We had dropped down to 7% in 2008. It wasn't good enough. We should be better than that. And now we're sort of 14, 15, which is a much better place to be. But so that was a legitimate thing. And the second one is around how your compensation philosophy and your incentives line up. They maintain that most companies incent the wrong sorts of things, and when they dig into these companies, they find them, uncover them, and go after that. So there's all manner of these sorts of shorts or long activists. Some of them are fairly constructive. I've heard CEOs tell me these guys are in our stock, and they're actually really helping us to see the company in a different light. Then there's the ones at the other extreme that you're referencing that is destructive, that's time-consuming, that isn't really aligned in terms of creating long-term value. And really their interest is just pumping the stock or dropping the stock so they can make a quick buck and exit. And all these players are in the system. And I know for us, we had only one real experience with that in 2008 or 9 when Ron Burkle got in our stock after Leonard Green got in the stock. And it was the weirdest experience for Jim and I and the others we've ever had. The guy, in the year, he went in the press a month later. He kind of rode on the Leonard Green position, and then he went into the papers and did all this stuff. And we never had a single conversation with him in the year that he held the stock. So we got in at sort of $11. He got out at sort of $30 or $40, made a ton of money. He didn't make the, we never had a single. The only thing we had with him one time, it was our shareholder meeting, and he faxed in his proxy like 2 minutes before the deadline. It was the weird, and he set up a lunch, and it was the weirdest behavior. So I don't really know. Our only experience with that is yes, we didn't like it. We didn't know. It took us a lot of time. We were dealing with it, and nothing really came out of it. So I think the message for me, particularly coming back from the Harvard session, was, look, there's a couple of things here that go with good stewardship of your company. And we need to do a better job ourselves. And if we do that, and we understand where they're trying to go find the weakness, we're going to keep ourselves in a better position, and they're probably not going to get in the stock. And we can go about our business. So that was kind of they do play a role. There is some good in the things that they're bringing up. It's not as good as they, I think, sometimes say that it is. And yes, it's a distraction, but it's part of the market.
Here's completely changing gears, Walter. How would you approach a problem like the bluebill listeria outbreak?
The which one?
The bluebill listeria outbreak.
Well, there's a lot of things that keep me up at night. One is competition. We got a great grocer here in HEB that's we've competed with for a long time. Another one is our culture, and what do we need to do to make sure we keep that the way it needs to be? Another one is food safety, and we got a pretty good team over there. But imagine if the story broke like it did for Jack in the Box, Whole Foods makes you sick. It's just not a good place to be. So I guess just in interest of time, just that you've got to double down on proactively on your food safety and on your situation, because, and then you just got to address it quickly. I mean, it's part of being in the business with food, and yet it's a major concern.
How do we get conscious capitalism into mainstream agriculture companies?
How do we get conscious capitalism to mainstream agriculture companies?
That is the question.
Some of them are getting a real wake-up call with respect to their performance of their companies and the performance of their stock. And I mean, give you Monsanto being an example, is some of that may be driven by the corn and the soy crops, but the market's giving them some messages around their performance. But look, I think the best way that anything happens is voluntarily, and I think by having discussions like this, putting the ideas out, you all take it and do whatever you do with it, go where you got to talk to your network and explore what makes sense for you. I think these ideas gradually grow, and I think that's the best way for something to genuinely catch hold and take form.
Okay. Julie says I can ask another one. So, what are you travel the country a lot, what are the economic trends you're seeing out there in the food business, and what are the more general economic trends you see as you travel?
I see, for the first time in my life, in 2015, a sea change in how people are thinking about the quality of food. You can look at it from any perspective. Look at the extraordinary comments from the fast food CEOs, Denise Morrison at Campbell, the comments from P&G or Kraft. Never in my lifetime, in my career, have I seen a place where people say, I think they actually get that the quality of the food actually matters with respect to the quality of your life, and people are interested in living longer, healthier, more robust lives. So I think the food business is tipped towards the natural. It's a $700 billion business in the U.S. We're $15 billion, so we're small with respect to the other players that are 60 to 100 million. But I think the food business is moving our direction now, and everybody's jumping in, and that's what you're going to see over the next 3 to 5 years is everybody's jumping into the space, and it's going to be a real transformation where the ones that are going to get left behind are the others who are left there trying to sell something that people don't really want. It's not growing. Conventional milk, for example, is down 3% year over year. Conventional milk, organic milk is up double digits, compounded for the last 5 years. Wow. If some sort of a proxy for that. General economic conditions, honestly, mixed. The winter was tough. I think the currency thing, the oil and gas, some of these things have created a bit of a headwind for the economy. The customer's not 100% confident. Obviously, we have the split between the very well and the rest, but it's still choppy mix. There's still not 100% confidence go forward. I don't think we go backwards. I don't see a black swan, but I still see a working through that's happening here. I mean, we're not seeing the type of growth in the economy that I think folks would like to see. There's some disagreement about what steps could be taken to do that. Now we got the elections going to paralyze us for a couple of years. Nothing happens resolving any of those sorts of things that would help on tax reform, energy areas, any of these other things that would be helpful to unleashing some of the potential of the economy. So I think that's the way I see it.
You were, at the beginning of your comments there, I think you were talking about something. You talked about the investor conference, which in the investor conference you talked about the fact that you thought the customer was ahead of the grocery business in terms of what they want to know about their food now?
I do think the customer, in many cases, leading Whole Foods and saying, what about this, what about that? And that was never the case before because there's so much information and so much resources for people. The customers are incredibly well informed, and they are, in many cases, pushing us along to do things, raise standards, do this, get rid of this, that sort of thing. Not all of it's legit or well thought out, but it still comes at us faster and faster. So,
I know you've talked about, here's an interesting question. I know you've talked about Howard Schultz as a leader and a friend. Could you talk about the recent Starbucks initiative to jumpstart conversations about race?
I could, yeah. Well, when we did Detroit, I actually did an interview and I said, we're going to Detroit to confront elitism and racism. And I got widely pinged for saying something like that. Why would I say something like that? And the reason is because, look, part of it I was talking about within our own company. And people perceive Whole Foods as an elite company or as an elitist company available only to some people. And as someone who's been doing this from the lowest level all my life, from a little store of 1,000 square feet, I know that this is about much more than just a few people. This is about serving all of society. We have a big idea here, and whether you buy it from us or from somebody else, there's some real merit to it, right? And that's the story we want to tell. That is not an elitist story. And increasingly you will see that that's the case as more information comes out. Racism is, the fact is it exists in this country, and it's blown up in the last year through the events of Ferguson and other cities. And what's the alternative to not talk about it, right? What's the alternative to not talk about it? It's there, it's real. And in doing the experience in Detroit, we created 130 jobs, I can tell you, from those very real conversations, and even confronting my own prejudices in the city of Detroit as I got there and my own fears, I came to a greater awareness about this. So I think the prospect for an America that's more inclusive, more diverse, more culturally diverse, more culturally relevant is a stronger America. And there's different ways to get there, but it starts with a dialogue. So I think that's what Howard was trying to do. I mean, he got, again, this idea of we're going to write it on the cups or you're an elitist golf company. Well, okay, all right, fine. But what are you doing about it? I mean, what are you doing? What steps are you taking in whatever you want to try to confront the fact that this is tearing the country apart right now? Yeah. It's tearing it apart. And you saw the recent issue of Time magazine, Black Lives Matter, right? I mean, this thing is, it's an issue in the country right now, and I think that's what Howard was, on the best level, what he was trying to do. I mean, people say he was running for president, all these other things, right? But I happen to know that he did town halls around in his Starbucks stores in different parts of the country for a few months before that, and he heard firsthand the stories from people about what they were experiencing. So I think I give him credit for trying to do something. Maybe it wasn't the best way to do it, but it's interesting. The reaction to it is as interesting as what he tried to do himself, which is that, what, you don't want to talk about it? It needs to be talked about because it's not resolved.
Okay. I think we have time for one more here. What is your view of products or goods made with GMOs versus natural?
My view is it's really inconclusive on the science with respect to that. I think it's sort of theological. It's like talking about any of these other topics that just people take very strong views on it. But our position as a company has been to label it and let customers make their own choices. And so our effort has been to say by 2018 we will provide the information so customers can make their own choices. Even with our own executive team, we don't agree on this particular issue. We don't see eye to eye on the merits of it or on GMO science and what it is or what it's not or where it makes sense. There's only 6 crops have been approved for GMOs in the United States, so it's not like they're everywhere. But they are in corn and soy, which is in a lot of products. But what we can agree on as an executive team is the customer's right to know, and that's kind of where we've come out.
Okay. Well, please join me in thanking Walter Robb.
Okay.
Thank you.
Okay?
Fantastic. Fantastic.